There's no question that 2025 has been off to a turbulent start. From tariffs to global unrest, many of us are wondering how our finances are going to fare this year.
And how do we invest during these turbulent times? Well, money expert and keynote speaker Robyn Thompson is back with her tips for weathering any economic storm. Always great to see you, Robyn. Thanks for being here.
Thanks so much. Yes. Perfect timing for you to be here because a lot of people saw the markets yesterday and they just nosedived. It is not looking better today. What do Canadians need to know that we're in this volatile time? We don't know where it's going. What do we need to know when it comes to investing our money?
Yeah, that's a really great question. And I think the answer is that we need to stay grounded, right? So I'm gonna give you some tips and advice today on how to do that. But I think one of the things that we need to do is we need to regulate our emotions around how we feel. Because panic is here, fear, greed. What does it mean for us? What does it mean to our finances? And it's about having agency around how we're making decisions, how we're looking at what is actually happening right now and what is the emotional reaction happening right now. And how do you make sure you're making the decision that's right for you so you're not selling assets right now in down positions that are going to hurt you over the longer term.
Okay.
All right, so Robyn, is...
We like that.
Good advice.
We like that.
So Robyn, is now a good time to invest or should we avoid it?
That's always the $1 million question, right? So the answer depends on what side of the aisle you're on. If you are an income investor, if you are retired and you're looking for income off your portfolio, and you don't have any room within your psychological space or in your bank account to take any risk at all, then you want to make sure you're staying conservative, you're taking the cash flow off your portfolio. If you are in a position where you have cash on the sidelines or you have a longer time horizon, this is a time to take advantage of some growth in the market. Because when things go on sale, yesterday was the worst day in the market in the US this year, and it was a 4-month low for the TSX here in Canada. So there are opportunities out there, provided we're making them with the right decisions.
Okay, all right, good to know. So you're gonna walk us through a game plan for investing right now, and you say it starts with a word that we hear a lot in money, which is diversification. So tell us why that's key.
So diversification is a simple word for saying reducing your risk. So you want to reduce your risk across the board. So how do you do that? You're investing in different sectors, you're investing in different countries, you're investing in different geographical regions. You want to make sure that when you're investing in things in your portfolio, they're not all going up at the same time and they're not all going down at the same time. So you need to create a place where you're looking at different sectors, both geographic and as well as different industries.
All right. So diversification also means investing in different sectors.
Yes.
So where should we be looking to put our money right now?
So this is going to come down to where is it that you feel you want to create some space in your portfolio. So one of the sectors you can look at would be healthcare. So healthcare is one of those defensive stocks. Defensive stocks essentially means that they're a bit more stable during some of these volatile times. They're typically large companies that are paying some stability in their returns from a healthcare. We're also starting to see some healthcare stocks come in that are now biotech. We're taking a look at medical devices. So there's a lot of really big money also to be made in the healthcare sector. Technology is a really big one. When you think of tech, you think of those big technology companies in the States that continue to boom forward, but they also fall quickly when we're seeing corrections in the market, as we saw yesterday. So it's about, is there opportunity in tech? Absolutely. You need to be able to have the stomach for it. Energy is another really great one. Here are things like oil and gas. You know, so is that a sector you want to be involved in? It depends, again, on your stomach and how you can manage it. There are opportunities everywhere. Consumer staples is a place where you have some defensive plays. People are always going to need to buy their toilet paper. They're always going to need to pay for their toothbrush. They're always going to need to buy the things that they use and need every single day. And a lot of those companies also pay dividends. You want to make sure that you're buying into areas that are right for you in your portfolio, whether it's stability or whether it's growth.
Okay, got it. What other assets should we be considering at this time?
Yeah, so you can look at different things like equity. So when you're taking a look at asset class, there's different asset classes that help you level out your portfolio. So this would be things like equities. So equity essentially is a stock, and it represents a share or a piece of a publicly traded company. It tends to be on the higher part of the risk profile. Bonds, which would be fixed income, which are generated towards more stable returns in your portfolio. They also pay income. They are meant for capital preservation. Real estate's another great sector. You can either hold real estate as a hard asset class, which means a house or an apartment or a condo. You can also access it through what's called a REIT, which is a real estate investment trust that you can buy on a publicly traded exchange, which allows you to give you income as well. And then cash or cash equivalents. This is going to be as it sounds. So cash for you to come into the market, a great opportunity if you have it on the sidelines, but it also is what's going to keep your lights on and be able to give you some buffer in these times where there's so much pain and economic uncertainty.
Now, I don't know about you, but when we start hearing all this tariff talk and everyone's freaking out, and is our neighbor an ally, is it an enemy, we start to look to other friends and allies and countries. So I wonder, is this the time that we should maybe be looking at how do we get into investing in maybe other countries? Is that even an option?
Absolutely. I mean, there's one thing that we know that's going to happen for sure, and that this next little period is going to be painful. It's going to be very painful for both people, for all sides of the border, all sides of all borders. So I think when you think about investing in different countries, so number one, Canada only makes up 2.5% of the global stock market. The US makes up 60% of the global stock market. So there is a huge range there. So you have to ask yourself, is the decision to buy Canadian a personal choice, of which it obviously is? Is it going to hinder long-term capital appreciation and things like growth stocks or other parts of the economy that's going to grow faster? Perhaps. So you need to look at that and understand, what am I giving up for what I'm getting now? And is this just short-term noise and I can sort of stay put where I am? And then you can also invest in international companies as well through an ETF, and I'd recommend that as well.
Okay, what about something for someone who's looking to invest and grow their money, but they're a bit nervous about the volatility and even not even having a good, clear handle on it?
Yeah, because it is volatility, and I don't think we're going to have a clear handle on it for quite some time. So this I just mentioned is called an ETF. So an exchange-traded fund essentially is a fund that holds many different things inside of it. So it gives you broad-based diversification, it reduces risk overall, and it allows you to have access to different countries as well as Canada and the US. And so I'd look for a conservative exchange-traded fund. They are built for stability, they're built for income, they're built for capital preservation.
Okay.
Let's quickly talk about high interest savings account, right? I think a lot of people can understand that. They can grasp that one easily. Is this a good option right now? Bank your cash, let it sit there, let it grow.
Yeah, so if you're looking for a place where you can place cash temporarily, then the high interest savings account's a great place to do it. You generally look at higher rates of return versus your regular savings account, so usually anywhere from 1 to 1.3 could be a bit higher. This is not a place where you're going to get capital appreciation and equity return. It's a place where you're going to park your cash for small periods of time. You're going to pay interest income on any of the money that's being made on the investments inside of the high interest savings account. But it's a good place to put short-term cash.
Short-term cash.
Yeah.
Okay, this is what we needed right now, Robyn. Thank you so much for these tips. Trying to look for any certainty that's possible out there right now. Okay, so digest that. We'll be back right after this.
Hey, you, come a bit closer. We've got so many more must-see interviews, spicy debates, lifestyle tips, and pop culture moments. So subscribe to our channel by tapping the logo below and don't miss out.